Askins, whether it's Cody Askins, whether it's Dallas Keithley, Matt Smith, Amy Hargis, all the way in the back. I mean, these guys are the real deal. They actually do what they preach. So when we're talking about this product, do know Brian's one of our top producers on our hospital indemnity product. I've been coming down to their office for the last several years and training their agents, and they don't need me anymore. They're experts on this product now, so they don't need me anymore. But two other things that we talked about throughout yesterday's conference that I wanted to touch on as well is passion. You know, a lot of the speakers up here yesterday talked about being passionate about what they do. We've all got to be really passionate about what we do. I'm incredibly passionate about this product because I helped build it 4.5 years ago with our actuaries, and I saw a need in the market where we could put together something that can help our seniors, especially those on Medicare Advantage plans, from the different copays and out-of-pocket expenses that they have. So I'm incredibly passionate about this. How am I going to get you guys to be passionate about it? You won't be passionate about it if I'm not. How are you going to relay that passion to your customer to build that trust? So passion is something that we all need to take pride in with whatever we're doing. And then also cross-selling, right? We're in this business to make money and also protect our seniors. So cross-selling is something that we've talked about yesterday and that we're going to start talking about today as well. Cross-selling is huge, especially as that Medicare Advantage plan market continues to boom. You know, I mean, there's 10,000 seniors turning 65 a day until 2030. There's going to be over 80 million Medicare beneficiaries by 2030. This market is booming. As the MAPD market booms, ancillary companion products like hospital indemnity products are just going to boom with it. So you need to get on that wave right now or you're going to be left behind. So a couple things I want to talk about, just big picture, obviously, is why do you sell hospital indemnity insurance? We'll also talk about where it fits in the market. We're going to talk about value as well. I want to make sure that everybody understands the value of these products. We'll take a deep dive into the Heartland National Hospital Indemnity product, the one that we developed with our actuaries a few years ago. You can kind of understand conceptually how those benefits are built together to protect our seniors. And then lastly, what I like to do, which other companies don't seem to do, they talk about product and all they do is talk about product. Let's talk about how you can present the product when you're on an MAPD appointment, how you plant the seeds to make that consumer say, you know, yes, this is something that I need to have. This is protection that I need to have. So why do you sell the product? Well, it's an opportunity for you guys to earn additional income. You know, it's going to reduce your acquisition cost. You're sitting down with that MAPD enrollment, you're making $539. What if you could make $300 extra on that appointment just by taking 10 minutes to present the hospital indemnity product? If you're doing a husband and wife, you know, you're walking out of that home with well over $1,500 with 2 MAPD new to enrollments plus a hospital indemnity plan. So it's going to put more money back into your pockets, it's going to reduce your acquisition cost, and it's going to help your persistency. You're going to have more than one policy in the home with that client. So it's going to do all of those things for you, so you really need to consider starting to offer this plan. I suggest presenting it on every MAPD enrollment. Why not? All we're doing is educating our clients. We said this yesterday, we're educators. So here are the gaps in your coverage, and here's a solution for those gaps, and let that client make that decision. So that later on down the road, when something does happen to them, because as we get older, it's not a matter of if, it's a matter of when, something inevitably will happen to them, and they're going to get a bill in the mail for that hospital copay. It could be $1,000, $1,500, $2,000. They're going to call you right away and say, hey, what's going on with this? You need to be the agent that took the time to go through that summary of benefits, pointing out the most expensive parts of a Medicare Advantage plan, and then offering a solution to fill those gaps. So that way, you can either be the hero on the other end of that phone call and say, hey, you actually took out this Heartland National plan for low $30 monthly premium. Let me help you get the claim filed, and you won't have to come out of pocket for any of those copay amounts that you just got billed for in the mail. Or you can say, hey, you know, we went over that coverage and you declined that coverage. I've got agents that actually use declination letters when they're sitting with clients, declining that they're not taking that coverage out, especially if they're doing it during the guaranteed issue period. And we'll talk a little bit more about that when we jump into the product benefits. But another way for you to earn additional income, you know, I had an agent yesterday stop by the table and said, hey, you know, during AEP last year, your product helped keep my lights on, helped put food on the table. Because we know you're not getting paid on those MAPD enrollments until after the effective date, so how are you earning a paycheck during AEP? You're adding companion products to it that make sense, that also put money back into your pocket. You're providing your client with more well-rounded coverage and at least educating them on the options that are available. It's affordable for your client, so you're not looking at a $100 monthly premium. It's going to be a low $30 premium if you're just looking at the base plan. Obviously, there's riders that you can attach to it to soup it up. But when you talk about $30, $33 versus a MedSup premium of $95, it's not anywhere near the cost of a Medicare supplement plan. Like I mentioned, it helps increase persistency, and the MAPD market is rapidly growing, and we'll talk about that a little later in our presentation. I really like this next slide. My boss has been an insurance agent for 35 years, and this was his favorite slide. It's my favorite slide. It just gives you a visual picture of the traditional or common options that people have when they're aging into Medicare. So on the far left, you got Medicare Part A, Medicare Part B, and a prescription drug plan. That's not great coverage, if you ask me. Your client's going to be responsible for the Part A deductible, $1,484. They're going to be responsible for the Part B 80/20 coinsurance. They're going to be responsible for 20% of that. And what is the most concerning or alarming thing to me about that category is that there's no maximum out of pocket. There's no ceiling. How can you do your job and feel comfortable leaving a client on just original Medicare knowing that there's no ceiling for what they can pay, during 1 year's time? So more than often, we're going to present the option in the middle, or we're going to present the option on the right. The option in the middle is supplementing original Medicare with a Medicare supplement plan. It's a great option. Plan G is a great option right now, covers almost everything besides the Part B deductible. Plan F went away for any new beneficiaries because the government wanted the consumers to have a little bit more skin in the game. So Plan G is a great option. Plan N is a great option as well. And Pekin, they've got a great Plan N here in Missouri and in Kansas. And their Plan N is kind of unique because they offer Silver and Fit with their Medicare supplement plans. So it's a free gym membership that you can attach to it at no additional cost for taking out a Pekin Plan N Medicare supplement plan. But this is a list of all the different MedSup options that are available. Essentially, you're paying a premium not to come out of pocket when certain things happen throughout the year. So you can see that chart on the right-hand side there. If you've got a Plan G, you're not responsible for that Part A deductible. You're not responsible for the skilled nursing copay. You're not responsible for the Part B coinsurance. So Medicare supplement plans are great options, but not everybody is an ideal candidate for a MedSup. Affordability could be a problem. So what do we do when MedSup's not a fit? Part C, a Medicare Advantage plan. Medicare Advantage plans include A, B, more often than not, the prescription drug coverage, extra benefits, dental, vision. These plans are getting really, really strong. Transportation benefits, over-the-counter grocery cards that are over-the-counter medications, grocery cards. These things are getting incredibly strong. The downside of a Medicare Advantage plan is that there's out-of-pocket exposure to your clients, all the way up until that maximum out-of-pocket. So in order to protect our clients, to serve them a little better, we had a hospital indemnity plan to their Medicare Advantage plan in order to give them that peace of mind. So you've really got two mindsets as an individual. One that's willing to pay higher premiums knowing that they're not going to see a lot of out-of-pocket costs. And then the other mindset is they're going to go ahead and save on those monthly premiums because when we talk about Medicare Advantage plans, most of them now are trending towards $0 premium plans. So they're paying $0 per month, only their Part B premium to have that Medicare Advantage plan. But there's copays. The trade-off is $0 premium, copays, and deductibles. So that's where the trade-off happens. So this person right here, he's more content on knowing that he's saving on premiums and will go ahead and have the money in a checking, savings, or hospital indemnity plan to pay for those out-of-pocket costs. And we've got a lot of people aging into Medicare now who've been used to paying $300, $400 per month for their group health insurance coverage. I came from the group space. When I started in that space 10 years ago, those plans were incredibly benefit-rich and employees paid almost little to nothing in terms of premiums for those plans. But claims continued to rise. And you saw those plans shifting more toward high-deductible plans with health savings accounts. So if you guys haven't checked out that Lasso plan, I think that's a great option as well, just from kind of my experience in the market. I think that's going to continue to capture market as well. And adding a hospital indemnity plan to a Lasso plan is also a great option as well. So you've got these people who are used to paying $300, $400 a month. You bring them to a $0 premium MAPD plan, do you think they can afford a $35 hospital indemnity plan? All day long. So now what I want to do, and I've had a lot of agents come by the booth yesterday saying, I know I should be writing hospital indemnity, I know all the different benefits, but I've just never done it. No one showed me how to do it. So I want to build a Heartland National hospital indemnity plan around a Medicare Advantage plan and show you guys how to do it. You know, what's the most expensive part of a Medicare Advantage plan? Hospitalization copay. What else do you have to worry about? Maximum out of pocket. Skilled nursing is important as well. So here is an example of a $0 premium Medicare Advantage plan summary of benefits. It's hard to see for me, but I can see that third line item down says $340 copay for days 1 through 5. So if that client is hospitalized for 5 days, they're going to be responsible for $1,700. You can see down the list here all the different copays. So again, that's the trade-off for you newer agents on that $0 premium plan, is that they're going to be responsible for all of these costs. So we need to do our job as agents and make sure that we're pointing them out so your clients are prepared for it, or they take out the hospital indemnity plan. You've got on here emergency room copay, ambulance copay, outpatient surgery copay, skilled nursing copay as mentioned over there. So a bunch of different costs that your client may be responsible for. So let's just throw out an example. Your client experiences an accident or illness. They take the ambulance to the emergency room, and they're hospitalized for 5 days. Their potential responsibility is $2,015. So again, $0 premium sounds great until you get that $2,000 bill in the mail. So what we want to do as agents is build the hospital indemnity plan around that exposure and help fill those gaps. So what we're going to do here is build Heartland's plan. We're going to choose a $350 benefit per day for 5 days. And again, this is an indemnity plan. I know their copay is only $340. We're choosing $350. They can do whatever they want with those additional monies because it is an indemnity plan. We're going to choose a benefit period of 5 days to match their copay exposure. The emergency room benefit's already built into our base plan, so you don't have to do anything there. All you have to do is add the ambulance rider to it. Monthly premium on this type of policy for a 65-year-old is $31.53 when you include the household discount. So incredibly affordable. Total benefit to your policyholder in this instance, $2,100. So they're actually going to make a little bit of money from having this product. And they're not going to have to come out of checking or savings account to pay for this expense. So what I want to do now is talk a little bit more about value, because you might say, well, that sounds good. Well, what happens if something else happens down the road? So in this example, we paid a $2,100 benefit. If you divide that by your monthly premium, it's going to give you 66.60. You guys know what that means? That means it's going to take your client over 5.5 years to pay more in premium than he or she would receive in benefit from having this policy here. Now here's the sizzle. The plan restores every 60 days. 61 days later, something happens to your client. Ambulance, emergency room, hospitalized again for 5 days. They're going to get another check from Heartland National for $2,100, all within the same year. Now we paid that client $4,200. You divide that by your monthly premium, it's going to take your client over 11 years to pay more in premium than he or she would receive in benefit from having this policy. There's no lifetime maximum with this plan either, so it can be used again and again. So 2 scenarios are going to happen to your client when they experience that accident or illness. They're going to get an invoice due immediately for $2,015, or they're going to get a check from Heartland National for $2,100. And to bring this home even a little bit further, I've got a real-life example of a policyholder under Secure Insurance Group that benefited from having our plan just in 2020. You can see, or hopefully you can see on this, the EOBs on the one side and the checks on the other. $18,600 was the benefit payment to that client. And Brian gave me permission, so this is one of Brian's clients actually, who had a Heartland policy, was hospitalized, I believe, for 31 days, and got a check for $18,600. So even though that client may not be exposed to that, maybe they only had that 5-day copay exposure there, They'll be able to do whatever they want with that additional money from that check. They had a Med Sup as well. Wow. Very strong. Again, I talk about the booming market that we're in. 54 million Medicare beneficiaries today. It's going to be over 80 million by 2030. We're going to add 10,000 seniors a day turning 65 until 2030. If you thought that you'd missed the boat, you haven't. You're in right now at the right time. Even furthermore, Medicare Advantage plans. In 2019, 39% of Medicare beneficiaries were enrolled into a Medicare Advantage plan. By 2030, it's expected that almost 50% of Medicare beneficiaries will be enrolled into a Medicare Advantage plan. There's a ton of opportunity out there right now, and we need to be adding these companion products to our clients, especially on these plans, to help protect them from those gaps in coverage. And as I mentioned earlier, most of these plans now are $0 premium. Over 56% of the Medicare Advantage plans in the market right now are $0 premium plans. So again, taking clients who are used to paying $300, $400 a month for their group health insurance plan and then bringing them to a $0 premium Medicare Advantage plan, they're probably thinking, holy cow, how is it so good? Well, it's because there's costs that are associated with it when the event something does happen. So affordability, not a problem with the hospital indemnity product. What I want to do now is take a deep dive into the benefits of our plan to kind of show you what all the features that we have and what you can plug and play with, because what we take pride in is the fact that it's a completely customizable plan. You can tailor it to your individual client. We had a 1.0 hospital indemnity plan that was launched in 2009, 2010, and we had a ton of success with it, but all the benefits were built into it. There was one rider that you could attach to it, but it was a one-size-fits-all plan. So 5 years ago when we started talking about, hey, we need to create something that was a little bit more flexible to meet the demand of all these Medicare Advantage plans, what we did was we created a cafeteria-style product. You choose your base plan, and then you could add any or all of the different riders that we have available. So again, in terms of persistency, when you're sitting down with a client and they're looking at your screen, and you're going through the different riders, maybe you say, hey, don't worry about this one, but this one would be a great one to add. You're bringing them involved into the process, and you're building a plan specific to them, and your persistency is going to be so much better. I've talked to a lot of agents throughout the room from Oklahoma, Missouri, Iowa, Texas. You can see on the map that we've got you covered. So, base plan, again, it's going to revolve around the hospitalization copay. You can choose from $100 to $600 per day in $50 increments. You can choose anywhere from 3 to 10 days, 15, 20, or 31. Now, if the hospitalization copay is $350, you can certainly sell more benefit if you'd like, $400, $450, $500. There's other costs that insureds must absorb when they're hospitalized. Maybe they have pets that they have to put in boarding or whatever it may be. You can certainly sell more benefit, and you can certainly sell more days. But we do give you the ability to match it exactly to whatever that hospitalization exposure is by having that flexibility from 3 to 10 days. The other competitors out there don't give you that flexibility. We also cover observation stays at 100% of the confinement amount they select above, with a max of 3 per calendar year. And that max is in addition to the base plan days that you've selected. We also have the emergency room benefit built into the base plan at $150 per admission, up to 4 times per calendar year, and it's not contingent on a hospital admission. So unlike the other competitors out there, when you take the ambulance to the emergency room and maybe you're not admitted, you're actually stabilized and sent home, you file that claim with our competitor, it's going to be denied, because the client wasn't actually admitted to the hospital. You file that claim with Heartland National, we're going to pay that claim all day long. I'm not going to let a $150 benefit ruin the relationship of the agent and the client. And then again, as I mentioned, we have a 60-day restoration period with no lifetime maximum. So a ton of value can be taken from this product. Highlights, guaranteed issue period between 64.5 and 65.5. So everything's GI outside of the lump sum cancer rider. We do have a 6-month pre-existing condition clause, so do be aware of that. It's an issue age-rated product. What does that mean? That means as the client gets older, as the policyholder gets older, the premiums don't increase with their age. So lock in the rate as soon as you can, whether it's 64 or even younger than that, because that's the rate they're going to pay for the life of the policy. And you might ask, well, what about rate increases? We designed this product to never take a rate increase. With the product that we launched in 2009, we've never taken a rate increase on that product. It is closed now, and we don't intend to take a rate increase with this product either. Unisex rates, we don't discriminate tobacco versus non-tobacco. Simplified issue product, one of the easiest products to get your app through the door, issued, and get paid your commissions. And speaking about commissions, we pay commissions on issue as well. So I've got a lot of agents out there writing our e-app on Monday and seeing deposits in their bank account on Thursday or Friday of that same week. And we'll talk about our e-application, but I think it's the best in the industry, incredibly simple to use. And why is it that way? Because we're all agents as well. We know what you guys want to see. So I think our quoting tool and e-application is by far the best out there. We do have a dual application available. We have a one-time $25 application fee. If you're enrolling a husband and wife, I didn't want you to have to collect $25 from the husband and $25 from the wife, so you can do it all on one application, and they can select entirely different benefits as well. And then we've got a bunch of optional riders that you can add to it. Oh, one other thing as well. Issue age is 18 to 85. Typically these products you're only going to see from about 50 to 85, but again, coming from that group space, seeing all those high deductible plans, we have a lump sum confinement rider that you can attach to this one, where I've got a lot of agents selling it with ACA and just under 65. So I said I didn't want to pigeonhole this product to the only senior market. So we go down to issue age 18. Here are the different riders that are available. When you look at a Medicare Advantage plan, one of the things you want to identify is what that maximum out-of-pocket is. Why? Because of this top rider right here. The diagnosis of cancer, more often than not, is going to have your client hit that maximum out-of-pocket. You can select to add our cancer rider onto the plan from $1,000 to $20,000 worth of benefit. We pay 25% for cancer in situ, and we actually pay 5% for cancer, for skin cancer. But it's really important to talk about that rider when you're looking at the MAPD summary of benefits and looking at that maximum out-of-pocket. If it's a $6,700 max, you might talk about adding a $7,000 lump sum cancer rider on it. We all know that cancer treatment typically spans more than 1 year. So if affordability is not that much of a concern, you may take that $7,000 and bump it to $14,000. On the example earlier that we had a $4,500 max out of pocket, so I'd be looking at a $5,000 cancer rider or possibly a $10,000 cancer rider. This is a very, very important rider to talk about when you're presenting our product and going through that summary of benefits. Then we have the lump sum hospital confinement rider, which really plays well in that under 65 market. You can select to add that on from $500 to $2,500 worth of benefit. And a good example of that would be maybe you've enrolled somebody, 35 years old, $500 per day plan for 3 days, added the $2,500 lump sum rider on it. They're hospitalized for 1 day. They're getting the $500, the $2,500, or a check from Heartland National for $3,000 to help them up against that high deductible plan that they may be exposed to. So another very, very important rider. The other two on here, it kind of just fills in the gaps of that MAPD summary of benefits. We've got a lump sum outpatient surgery benefit rider from $1,000 or from $100 to $1,000. And then we also have the skilled nursing facility benefit rider. It does have a 20-day elimination period to match Medicare, and you can choose $150 per day or $200 per day for days 21 through 100. And again, it's an indemnity product, so if it's higher than what their copay exposure is, they just keep those monies. The cancer rider also has a built-in recurrence benefit, so no additional premium. Your client has a $10,000 cancer rider. They get diagnosed with internal cancer. They send us the pathology report. We pay that $10,000 claim. They go through a period of treatment. They're in a period of remission, no more signs of cancer. After 1 year, our benefit restores to 10%, 2 years 25, 3 years 50, 4 years 75, and it's completely restored after being cancer-free for 5 years back up to 100% of what that face amount was that they selected. Here's a check, actually from my boss, Bill Ellsworth, and one of his clients. Cancer treatment is hard on you, no doubt about it. So you want to be focused on recovery and getting better, not how you're going to pay for the treatment. So while this $10,000 check to the client, may not solve all of their problems, it'll definitely make them feel a little bit more comfortable before they start going through treatment. Three other riders that you can add to the plan. 95% of the plans that I see come across my desk have the ambulance rider. It's $2 and change to add it to the plan. $200 per trip, 3 per calendar year. Again, not contingent on a hospital admission. We've got a wellness benefit rider that you can attach to it where we will pay your client a $25 benefit from having any of these wellness tests, colonoscopy, mammogram, chest x-ray, all these different wellness tests right here will pay your client a benefit for getting those done. And then we also have a dental vision hearing rider to it. So when you think about it, really at the end of the day, this is 3 traditional standalone policies built into one. Hospitalization, cancer, dental vision hearing. You can select $1,000 or $1,500 per calendar year worth of benefit. There is a $100 deductible. 3-month wait for preventative, so you'll have a $75 benefit for dental cleaning, $50 benefit for a vision exam, $50 benefit for a hearing exam. After 6 months, you can get your basic services done, filling, root canal. You can go out and purchase eyeglasses, contact lens, hearing aids, or any supplies or repairs associated with those hearing aids after that 6-month period. We do have a $200 max on prescription eyewear or hearing aid per calendar year. A lot of the competitors restore that every 2 years. And then after 12 months, you can have your major services done, your bridges, crowns, dentures, or extractions.
How much do you pay for hearing aids?
I was about to say that, but no, it's okay. It's okay. I just had to take a drink first. So year 1, we're paying 60% of charges. Year 2, we're paying 70% of charges. Year 3, we're paying 80% of charges. And we're paying off of actual charges, not usual, customary, and reasonable. So whatever your provider bills is what we're paying off of, which is also really unique in the market. Yes, sir?
Like advanced plans of $3,000 a year for like Anthem.
Sure.
For hearing aids. So they have this plan and they've got the advantage plan. How does that affect?
Doesn't coordinate. So there's no coordination of benefits. In addition. Exactly. Exactly. 1,000 or 1,500, and you can select. What's that? No, vision and hearing, $200 per year. $200 per year. But again, actual charges. A lot of the competitors are paying off of UCR schedules, which can be really hard to understand if your provider bills you $160 and you're only getting reimbursed for a percentage of $130. Yes, sir?
That's non-network plan.
Correct.
Okay, the other thing is the 60, 70, 80, is that for all dental services?
Correct.
Everything from routine to crowns?
Correct. But there is that waiting period in that first year. So 3 months for preventative, 6 months for basic, and then 12 months for the major services. But yes, it will cover all of those. And what also you won't see with other competitors out there, 80% of major services, you don't see that. Usually it's capped at 50, 60%, something along those lines. So now let's talk about the good stuff. I'll go ahead.
What were we saying about the $200 limit?
There's $200 limit for eyewear, for vision, or hearing aids.
To the dental 1,000 or 1,500 in addition to
Well, not in addition. It's part of. It's part of.
Okay, so hearing aids, the plan will only pay $200 toward a hearing aid.
Correct.
It's not, okay.
Correct.
Can we have a copy of the PowerPoint?
Sure. Yeah, no doubt about it.
Thank you.
So now let's talk about the juicy stuff, the commissions, right? So adding to your bottom line, reducing your acquisition cost, increasing your renewal income, because yes, it's a HEAP Year 1 product that's going to help you during AEP, but there's also renewal commissions paid on this as well. So if we just take this example here, 65-year-old, 5-day plan, $350 per day, $200 ambulance rider, and you added the $10,000 lump sum cancer rider. You can see the premium associated with that plan, $65.90. Remove your 7% household discount. It's easy to qualify for in most of our states. You just have to live with someone, no more than 3 people, 18 years or older, or reside with your spouse to take advantage of that 7% household discount. So incredibly easy to qualify for. Monthly premium, $61.29. If you sell 2 of these plans a week for a year, you're going to increase your bottom line by $40,000 per year. And then again, building some renewal income as well with it. So how do you sell a hospital indemnity plan? Present it during your MAPD enrollment. You can also follow up. If you're out there running and gunning through AEP, you can certainly come back after the first of the year and present it after AEP. Yes, sir? Yes, yes. And all full commissions on GI as well. Yeah, you'll have to talk to Brian about that.
Go ahead and speak for him.
So also follow up to your MAPD after AEP. And then, if a Medicare supplement plan is no longer affordable for your clients as well and you're moving to a Medicare Advantage plan, certainly an option for them to add to it to give them a little bit more coverage. Next part of our presentation, I learned from my boss. He's been doing this for 35 years, as I mentioned. This is his presentation that he trained me on, that I've been training agents on for the last 4 years. So you're sitting down with your client. You're reviewing your Medicare Advantage plan with them, that summary of benefits. You stop on the inpatient hospital copay. You can see here $340 for days 1 through 5. Mr. Jones, if that means if you're in the hospital for 5 days, you're going to be responsible for $1,700. But don't worry, Mr. Jones. At the end of our review of your Medicare Advantage plan here, I'm going to talk about a product that can help fill those gaps so you won't have to worry about that $1,700 bill. Continue through the review of your Medicare Advantage plan summary of benefits. Stop on your ambulance copay, your ER copay. Again, Mr. Jones, don't worry about those copays. I'll show you a product that can help fill those gaps for you. You can continue through your review. You can stop on outpatient surgery, do the same thing. You're planting the seeds, right, throughout your MAPD review of all of these out-of-pocket costs that your client may be responsible for. So again, don't worry about this charge. I'll show you why after we review your Medicare Advantage plan here. You finish your review, you close your folder up, and you say, that's how your current program works. Do you have any questions? Well, you talked about over $2,000 worth of expenses that I may have to be responsible for. What were you going to show me? Great question. I'm glad you asked. Back in early 2005, when we were looking at Medicare Advantage plans, we really weren't sure how those benefits were going to be paid out. And after a number of years, we realized that our clients were spending a lot of out-of-pocket costs when certain scenarios took place. So let me ask you a couple of quick questions. Have you ever been in an ambulance? Yes. Even if they say no, okay, well, if you had been in an ambulance, where would the ambulance take you? To the emergency room. Or they'll say to the hospital, and you'll say more specific, to the emergency room. Now, Mr. Jones, you've already triggered 2 copayments on your Medicare Advantage plan, your ambulance copay and your emergency room copay. Now that they have you in the ER, one of 2 things is going to happen to you. They're going to stabilize you and send you home, or what are they going to do? They're going to admit you to the hospital, and that's going to trigger the most expensive part of your Medicare Advantage plan, that $340 copay for each day that you're in the hospital up to 5 days. So that's why we have this product in our portfolio of products, and most of my clients add this plan to their MAPD to help protect them. And this is the point where you can bring out our quoting tool, which I'll show you on the next slide right here, how to quote the base plan. You can quote 1 or 2 applicants at the same time. Super simple. Super easy. First name, date of birth, how much do you want per day, how many days do you want it for, what state are you in, and do you qualify for the household discount? Then you bring your client's chair a little bit closer, and you see all the different riders that are available to them. What I really like about our quoting tool is it subtotals everything in the top right-hand quarter here. So you've got $103.70 on this one, minus the household discount, $96.44. I probably souped this one up just to give you guys an example of what it looks like. But $350, 5 days, emergency room benefit built into it. We've added some cancer protection, the ambulance protection, and then also the dental vision hearing right there as well. So you can actually plug and play with these different benefits to hit a price point, to hit a consumer need, whatever it may be. But again, when you build the product specific to your client and you tailor it to them, they're going to feel like that product was built for them and help your persistency out.